Mr. Dave Koenig. He's the Director of Tax and Profitability for the National Restaurant Association. Mr. Koenig has over 2 decades of experience in the tax and regulatory areas. The National Restaurant Association, founded in 1919, represents more than 380,000 restaurants and suppliers. Welcome, and you have 5 minutes.
Thank you, Chairwoman Velasquez, Ranking Member Graves, members of the House Committee on Small Business. I appreciate the opportunity to testify before you today on behalf of the National Restaurant Association. My name is Dave Koenig, Director of Tax and Profitability at the Restaurant Association. I'm here today to ask Congress to make permanent the 15-year depreciation schedule for leasehold improvements, restaurant improvements, and new construction and retail improvements. In addition, I ask that Congress increase the business meal deduction from its current level of 50% to 80% to provide additional stimulus to the economy. The restaurant industry plays a significant role in this nation's economy. There are 945,000 restaurant and food service outlets in this country. 7 out of 10 restaurants are single-unit operators, which means the restaurant industry is an industry of small businesses. Most eating and drinking establishments employ 50 or fewer employees. Restaurants also serve as the conference rooms for many of the self-employed and other small businesses. This year, the restaurant industry is estimated to generate $580 billion in sales with an overall economic impact of $1.5 trillion. Every dollar spent dining out generates $2.34 in business for other industries. The 15-year depreciation schedule for leasehold improvements, restaurant improvements, and new construction and retail improvements expired at the end of 2009 and must be retroactively extended through the end of 2010 and in fact should be made permanent. Bipartisan legislation, H.R. 4306, introduced in December 2009 by Representatives Kendrick Meek and Pat Tiberi, would make the 15-year depreciation schedule permanent. The 15-year depreciation schedule has made significant capital available for restaurant owners to make capital expenditures with the tax savings. These capital expenditures translate into jobs in the rest of the economy. In addition, a faster, more accurate depreciation schedule has a direct impact on a restaurant's bottom line. The shortened depreciation schedule provides restaurateurs additional cash flow to reinvest in their businesses, allowing them to expand restaurant jobs and contribute to the community. Even during these difficult economic times, restaurateurs are planning capital expenditures to improve or expand their businesses. According to the National Restaurant Association's most recent tracking survey last month, 47% of restaurant operators plan to make a capital expenditure for equipment, expansion, or remodeling in the next 6 months. The ability to plan for these expenditures and know what the tax treatment will be in subsequent years, particularly during these tough times, is important to those making such decisions right now. This provision is an important driver of economic stimulus. Making the depreciation schedule for restaurant improvements and new construction permanent will fuel economic activity and create jobs. It's important to note that 15 years, rather than the current law 39 years, is also a much more accurate time frame for depreciating or writing off restaurant buildings. With 133 million Americans patronizing restaurants every day, restaurant building structures experience a daily human assault unlike that borne by any other type of retail building. In fact, our research shows that most restaurants remodel and update their building structures every 6 to 8 years. The other issue I'd like to talk about in my oral statement is the need to increase the business meal deduction to stimulate the economy. We strongly urge Congress to provide economic stimulus by increasing the deduction from 50 to 80% for spending on business meals and entertainment. For many small companies, the ability to conduct business over a meal is their only means of advertising and marketing their business. While officially the recession may be ending, the restaurant industry is still feeling the effects of decreased consumer spending and increased unemployment. Increasing the business meal deduction to its previous level would encourage consumers to dine out and would also benefit small businesses. This committee has been a long-time supporter of increasing the business meal and entertainment deduction as a means of providing a boost to the economy and tax relief for a legitimate business deduction incurred by our nation's small businesses. Last Congress, this committee included a provision to increase the deduction from 50 to 80% in the Small Business Tax Modernization and Stimulus Act of 2008. In closing, I greatly appreciate the opportunity to testify on behalf of the restaurant industry before you today, and I am happy to answer any question that you may have later on. Thank you very much.